Alright, so before we get to the trade breakdown and daily recap part of this video, I want to actually show you guys the live trade executions that we took on live stream today. So you're seeing me enter long off an inversion fair value gap, floating my stop around that short-term low, and I'm looking for a run towards previous day's high, and then potentially some fib extensions. You see, price gets really choppy in here as the other indices are catching up with the NASDAQ, making me a little bit skeptical about this trade. You know, it is a premium entry, but we do have a strong draw on liquidity, so I am willing to, hold on to this trade and see if we can get a take profit level here. So you see it's going sideways, still working inside that inversion fair value gap. We do start to see some speed higher, and you'll see what ends up happening here. We actually bring the stop up to break even after we get that expansion, and then we do unfortunately get wicked out, and then price runs towards that previous day's high level. It ends up forming an SMT there. This is the second trade we took today. I'm re-entering long off the exact same idea. This time, 15-minute bullish fair value gap, 1-minute inversion, long off the inversion as well. You see us trading back in towards that bullish fair value gap, and then I want to see us close above that black line that I just drew. And the target now is no longer previous day's high, but it's that daily rejection block level, also that old new day opening gap level. You see, I'm marking out the potential order block. And once that order block forms, I'm expecting speed and delivery towards that short-term high. You see the order block forms right there. We trade into it once, trade into it twice, both times respecting the opening price. I scale the stop up and we get the first partial on that trade. We did put in an SMT, so I'm aggressively moving my stop here towards the low of that new day opening gap. Do not want to see that get traded too. And then we have that bullish fair value gap that I just annotated, so I'm expecting a run towards higher. Trailing my stop to the bottom of that bullish fair value gap. Not looking to give any partials back. We're a couple points away from our take profit level here. I close the trade and then we run towards that objective shortly after. Okay, so we're gonna do a trade recap / daily recap on August 8th, today, Friday. And I'm gonna break down why we were bullish, why I didn't trust this short, why I took a long here and here, how I missed an entry opportunity here, and basically everything from start to finish. First things on the daily chart. Very simple narrative to why we're bullish. Higher time frame order flow and weekly power of 3. I said it on Monday that I was not expecting Monday's low to get taken because of how strong this displacement was, right? Just using that narrative that this is a very strong displacement. I don't know if you want to say the banks got in, but there's a very obvious displacement on the daily chart, and I was not expecting this low to get taken. That means the higher probability drawn liquidity is all-time highs. There's obviously profit taking along the way, but that was the drawn liquidity. So higher time frame bullish order flow and the weekly power of 3 says we're likely to move higher today. 15-minute chart going into market open, I was bullish. I was looking for high probability longs. Now, what does that exactly mean? Longs from a discount. Longs after we take sell side. Longs after we, in the silver bullet hour and we get a continuation model. Those kind of long setups are high probability. Originally, I would have liked to see London lows get taken and then potentially a reversal because we have nice discount PD raise in here. But that was just a best case scenario. That did not happen. What ended up happening was we came down. We took out this pre-market low, just a short-term low, and then we started to expand aggressively. This is us trading into the opening range gap, which I'll annotate right here. You see that? Opening range gap. We completely fill it in, I believe, but don't quote me. I'm trying to get through this to not make it too long. But we pretty much, opening range gap, we fill it in, and then we get the closure above, making this a bullish order block. Now, I saw this at the time, and we called it out that you could be getting long here. I thought it was a little bit too aggressive because we didn't really have, a real run on sell side that was kind of major. For example, the pre-market lows, or like I said, London lows. So I was a little bit skeptical. Then we saw the obvious draw towards, and when previous day's high is open, strong drawn liquidity, we're looking for that as an objective. So we're looking for a continuation model long. The first trade I took today, we traded into a bullish fair value gap, and then we got the inversion here, right? Now I scaled my stop, I would argue a little bit too early, but it was taking a really long time to get to that previous day's high mark. We get stopped out right here, unfortunately, and then we get the run to previous day's high. And realistically, that wouldn't have been the highest risk to reward trade anyways, maybe around 1.5 R. The stop was resting around here, floating. So it wasn't the highest probability trade, and it is a premium entry. But when we have a strong drawn liquidity like this, we're looking for that, continuation model. Now, I want to talk about why this short did not pan out. A lot of people were saying SMT at previous day's high, We swept previous day's high and we broke lower. But what people fail to realize is, one, how much lower are we really going to go? Because we already set the low below 930 open, and we're not likely to take this low because we're bullish. So you need to ask yourself, if you're shorting here off of the order block or the inversion or the break or whatever it is, what are you actually targeting? What does your model here say that we're likely to reach towards? Is it 50%? Maybe it's just the next short-term low right here. Is it 25% of the range? You got to figure that part out. Because in my opinion, the retracement trade is not a high probability trade because you don't have a real draw on liquidity. It's just going to go lower and then eventually continue. So why trade the retracement when you can trade the continuation? This is your protraction model. This is what I executed to take the long from here to this short-term high and then the daily rejection block level. Pretty much, catching near the high of day as of right now. So pretty good partial taking on those trades. So the inversion model, pretty simple. 15-minute bullish fair value gap. This is a breakaway because we have a higher time frame draw in the scopes. And then obviously the speed in which that formed. Execute the inversion after the 15-minute tap. A lot of people in short here because we broke down aggressively. I even said it on live stream that I would have never take this short. I understand that people were in this short, and I'm not here to hate on you. I'm here to maybe provide some insight. The move lower is likely once we break down, yes, but that is just a pattern. Once we get that CISD, how much lower are we really likely to go? You have to ask yourself that. It's not all the way down here. It's probably not anywhere in this price leg, right? So you have to figure out how you're going to manage that trade so you have an edge. We take the high here. I take my first partial. The main reason I took a partial here is because I was fearful of a deep retracement because of the SMT and us going back into previous day's high. So I took a partial there, and then I left the rest to the new day opening gap / daily rejection block level. Now, because all-time high is in the scopes, I think it's possible we get there. Maybe not necessarily today or in this session, but it's definitely possible we get there. But that's it. The old new day opening gap level on the daily chart, that's this closing price and this opening price. So that's your old new day opening gap. This is your daily rejection block, right? The highest body, open or close at the swing high. So I'm taking that level. If you remove the wicks, right? There's a lot of liquidity resting at that level, so it's likely to be engaged. And that's it. Very simple. We took two of the exact same models, both protraction models, long. If you want to learn about that, it's in my YouTube video. And that's it. That's the daily recap for today. Overall, it was a pretty good trading session. Till next time. Peace.